Hello and welcome back. So the second intraday strategy I want to talk about is potentially how you can use shorter time frames to hone your entries and be more precise with entries and exits. So first off, if you're using this approach, what you do is you use a longer time frame. So here we've got gold on the daily chart, and you can see you take previous resistance or support and then you use shorter time frames to hone in on trading opportunities. So for instance, here in gold, you can see we had this low back in July at 12.05. And more recently, as we're dropping back into this area, you know that 12.05 has previously acted as support. You're not certain it will again, but you can look on shorter time frames to look for low risk entries. So now if we change from daily and we go shorter, we'll just use an hourly for this example. You can see as the market was drifting into this 12.05 region, the market fell down here. Now as we came in, tested 12.05, we had this big bullish engulfing candle on H1. Now that's quite positive price action, so what you could look to do potentially is enter a long position with a stop loss below the low of that candle, so you'd have a stop loss around, let's say 12.04, and then you look for a bounce back to the upside. The good thing about this strategy is what you're doing is trading off longer term levels, but in using shorter term time frames to look for your entries, what you can do is be more precise. You don't need to have as wide stop losses or as risk as much in the market. You can see subsequently, we had a nice bounce to the upside where the market jumped around $13, $14 in the space of 7-8 hours afterwards. Euro US dollar is another one. This was a nice level where we had here around 121.55. Now this was actually combined with some news. We had an ECB rate decision. You could see a possible break of this 121.55 would take out this previous support, pave the way for some downsides. So if we now go to a 1 hour chart, we go back, let's look more closely what happened. It was a similar price action to the one I was describing in the Bank of England rate decision, where we had the ECB rate decision here, the market tried to come higher, we failed, we dropped down lower. Now if you enter short of this candle here, you can have your stop loss more tight than if you're trading off daily charts. You could have the stop loss above here, so let's say 121.80, 121.75 possibly if you want to be tighter, and then you can look for the market to drift lower. Lo and behold, it continued down for quite some time, and we actually fell around 600 pips till we hit this lows around the 115.10 handle. More recently, we had another example of this. So if we look at this consolidation period we've got this falling trend line here. You can see the market was drifting up into here last week. If we return to the 1 hourly chart, you can see around this level on the falling trend line, we got some negative price actions. We had this previous peak here around 117.40, 117.45, and then more recently we had first of all the wick on this, which is indicative of selling pressure, and we had a large, almost bearish engulfing inverted hammer at the same time, which could be seen as a negative sign. You could enter short here with a stop loss above the highs and look for a move back down lower. Just today, actually, I've noticed a nice example for the US dollar CAD. This is a daily chart. You can see we've got this rising trend line going back to the start of the year. The market fell into this daily rising trend line rather than just blindly buying when we go into the rising trend line. If you use shorter time frames, so H1 charts here, you can see we found some support. You can see buyers were stepping in. We stopped making lower lows here, and then once we pushed higher, this could be seen as a potential setup where you could enter long with limited risk because you're not having to place your stop loss on daily charts. Finally, the US 100 cash, so I just want to speak about this. This was when we had the all-time high back here at the end of last month. We had the gap low on the Facebook earnings, and we drifted back down. Now as the market came back into this area, so this was essentially an overnight gap. So this was from when the candle closed on the daily. This is a potentially significant area to keep an eye on, 7472. Recently, we've just come back into this region, and you can see we are seeing some resistance. The market hasn't quite reversed yet, but there are wicks above these last couple of candles and a fairly negative candlestick, the last one that we saw close. So this could be a potential live setup that we have where you could enter with stop losses above the highs and look for a pullback of some of that move lower.